Over the past year, there's been a lot of unexpected crazy things going on, meaning the government have had to spend billions of pounds more than they were expecting on things like PPE, a vaccine, the furlough scheme, loans for businesses, and so much more. Many people have speculated that in order to pay for all of this and to rebuild the economy, the government are going to have to raise taxes in order to recoup some of the money that they've spent. On the 3rd of March, we finally got an answer to the speculation around changes to UK taxes when the Chancellor Rishi Sunak revealed the latest UK economic budget. So in this video, we're going to take a look at what is happening with UK personal tax. We'll look at an update to capital gains tax, and we'll also cover the changes to UK corporate tax. We'll hear from the Chancellor Rishi Sunak about these changes and take a look at how these changes to UK taxes could affect you going forward. So to explain what personal tax is, it's simply an income tax that you pay on your earnings. Most people who are employees have their company deal with this, and it's all sorted through PAYE. If you're self-employed, a freelancer, or even a sole trader, you or your accountant probably deal with this directly. The personal tax brackets are important to look at, especially considering the changes that are coming up. Currently, you can earn up to £12,500 per year before you pay any personal tax. This is a standard personal tax-free allowance. Any amount earned over the £12,500 all the way up to £50,000 falls under the basic tax rate of 20%. Earnings over £50,000 up to £150,000 per year fall in the higher tax rate of 40%. And finally, anything over the £150,000 is taxed at the additional rate of 45%. Now that's cleared up, let's hear from Rishi Sunak on his plans going forward for UK personal tax.
Our response to coronavirus has been fair, with the poorest households benefiting the most from our interventions. And our approach to fixing the public finances will be fair too, asking more of those people and businesses who can afford to contribute and protecting those who cannot. So this government is not going to raise the rates of income tax, national insurance, or VAT. Instead, our first step is to freeze personal tax thresholds.
So to break that down, the income tax brackets that I mentioned earlier will increase slightly in April. This means the amount you can earn before hitting the next tax bracket slightly increases as well. Rishi Sunak hasn't increased the actual personal tax rates. Instead, from April onwards, he'll be freezing the tax brackets all the way up until 2026. This change is known as a stealth tax because it's packaged in such a way that the change is unnoticed or simply not recognised as a tax increase. With the majority of people's salary increasing each year in line with inflation and the personal tax brackets frozen at the same level, it means each year more and more of people's income will creep slightly into the higher tax brackets. To put that into perspective, this change is expected to raise over £6 billion for the treasury over the next 5 years. To help reduce the amount of income tax you'll pay going forward, now would be a good time to take advantage of tax-free investments. Using things like ISAs, where you can pay in up to £20,000 per year and not pay any tax on any returns made, or even make further pension contributions, which will reduce your overall taxable amount. Before we go on to the next one, if you're finding this video useful, please give it a like because it really helps out the channel, and make sure you subscribe for more videos like this in the future. So capital gains tax is the tax that you pay on profits when you sell or dispose of an asset. This includes selling it, giving it away, swapping it for something else, or getting compensation for it. This can include things like personal possessions, property, shares, and business assets. The capital gains tax-free allowance is currently £12,300 and £6,150 for trusts. Any profits you make above this allowance is taxed at a rate of 10% or 20% depending on your tax bracket, or 18% or 28% on property gains. So here's what Rishi Sunak announced regarding capital gains tax.
And I will also maintain at their current levels until April 2026 the inheritance tax thresholds, the pensions lifetime allowance, the annual exempt amount in capital gains tax, and for 2 years from April 2022, the VAT registration threshold.
So similar to the personal tax, there's going to be no increase in the capital gains tax rate, but there will be a freeze on the tax-free allowance until 2026. It's important to note, you don't usually pay capital gains tax on gifts to your husband, wife, or civil partner, so this may be something you want to consider if you're over the capital gains tax-free allowance. You should also take advantage of things like ISAs or even potentially premium bonds, which are not affected by or included in any capital gains tax. So the big one, corporation tax. This is the amount of tax you pay on your company's profits. This is important even for people who don't own companies. It could even affect employees, because tax rises could affect a company's ability to invest back into the company in things like benefits, employee incentives, and even pay rises. The current corporate tax rate is set at 19%, but there's been a lot of talk about this being increased to help recoup some of the money that the government has spent over the last year. So here's what Rishi Sunak had to say about corporate tax.
The government is providing businesses with over £100 billion of support to get through this pandemic. So it is fair and necessary to ask them to contribute to our recovery. So the second step I am taking today is that in 2023, the rate of corporation tax paid on company profits will increase to 25%.
So the government are planning to increase corporate tax from 19% to 25%, but there are a few points to consider. They're not putting the rise into place until 2023. This allows 2 years for the country and the economy to get back up and running, so companies won't be affected by the corporate tax rises while they're trying to get back on their feet. Even when these changes are implemented, companies generating profits of less than £50,000 will stay on the 19% corporate tax rate, and this rises in increments all the way up to £250,000 and above, where businesses will begin paying the full 25% corporate tax. What do you think of all these changes that are going to be made to UK taxes? Let me know in the comments. And for more reaction to the UK budget announcement, check out these videos here. Thank you so much for watching, and I'll see you in the next one.